Is Robinhood gearing up for a breakout, a breakdown, or a sideways trend? Today, we will break down the charts across weekly, daily, and 4-hour timeframes, and we will also look at the option chain to see what traders are betting on. Welcome back to Fintech Spy, where we dive deep into fintech charts and market trends. If you are new here, hit that subscribe button for more technical breakdowns. Let us hop right into Hood. As we can see on the weekly view, Robinhood has broken the trend and not only put in a higher low, but also a higher high than the previous week. We also luckily did not form a new gap like the one that formed a few weeks ago, so we are safe there for now. That same Fibonacci level we bounced off of last week helped propel us higher, and we closed above the next Fibonacci level at 124.55. With that move, there should be fewer obstacles in the way as we work our way back toward the prior all-time high. From here, the path is open for price to push up to those highs either next week or the week after, as long as buyers keep stepping in on dips. The Stoch RSI is also showing that we are about to cross back over while still sitting in oversold territory, which gives us plenty of potential momentum to fuel a run back to all-time highs. Moving over to the daily view, we can see that the move to the upside really started to kick in back on Monday and Tuesday. From there, we gapped up this morning on the excellent news of an acquisition, which added even more fuel to the move. We will be having an interview breaking down that acquisition later this week, so stay tuned for that. This gap up also carried price above the 50-day EMA, which is an important short-term trend line for many traders. Into Friday, keep an eye out for a possible attempt to fill part of that gap, especially if short-term traders decide to lock in profits. A controlled pullback to fill the gap would actually help reset the Stoch RSI back toward neutral and give the chart more room to run on the next push higher. Coming over to the 4-hour chart, we can see that price is now very overbought after this latest push. The move higher is also starting to show up clearly on the MACD, with momentum bars building to the upside. Because of that, watch out for a small pullback on Friday to help reset both the intraday readings and the MACD back toward more neutral levels. A healthy, controlled dip here would actually set the stage for a bigger rally to kick off early next week rather than signaling the end of the trend. Looking at the November 28th options chain, we can see a very uneven spread that highlights the ongoing tug-of-war between bulls and bears. On the bullish side, traders may try to keep the price pinned around the 125 strike or even propel it toward 130 to close out the week. On the bearish side, there is still interest in dragging price back down toward the 120 or even 115 levels, where more downside bets start to pay off. Ideally, bulls keep stepping in so that any Friday pullback is controlled and does not turn into a sharp drop that leaves a lot of options expiring worthless. Robinhood traders definitely stepped in and stopped the bleeding back on Monday, and now it is all about keeping that momentum going. The one wild card is that the past 4 Fridays have been very bear-driven, which means bulls will need to pull out all the stops to keep the price green into the weekend. For now, my outlook is optimistic. The risk is still there, but the work done so far has eased a lot of the earlier fear in this chart. If buyers stay active on dips and manage the inevitable pullbacks well, this move has room to extend. If you agree, disagree, or want another ticker in the spotlight, drop a comment and we will spy on it next.